Hello, my name's Eddie, coming live from Dallas, Texas. Welcome to our first podcast of the Multi-Bagger Growth podcast. Joining me today is the co-founder of the website, Sebastian.
Hi everyone, check us out on multibaggergrowth.com. Today we're going to be doing our first deep dive into a company that I almost picked as my first multi-bagger growth selection, but while doing the deep research that I do, it dawned on me that it was a bad pick. I think the stock can go up, but I'm just not ready to say that it's going to be a 10-bagger, which is what I look for in stocks. I cannot say that I honestly believe it's going to be a 10-bagger based on a lot of factors that we're going to go over in this podcast. But that's what I want to say the purpose of this podcast is. It's to bring you stocks that I believe will go up by 10 times within the next 5 to 10 years. These are buy and hold stocks of great companies that are in industries with tailwinds that have the potential for long-term, year after year growth, which is what can bring around that life-changing kind of money, and that's my strategy for investing. So I want to share that with you. This is our first podcast on this subject, and today we are going to be talking about FUBOTV, ticker FUBO, and that was the first stock that I really took a deep dive on and decided, and I was close to making it my multi-bagger growth number one pick, but I decided it's not my pick yet. I think it's, for a lot of reasons, we're going to go over those today. So do you want to introduce the company a little bit?
Well, I was going to ask you before we introduce the company, what are some of the criteria you look at for these multi-baggers?
So I look for companies, and I just off the top of my head, I know there are like sort of more detailed lists of this, but I look for companies that are sort of top dogs in their industry. Like, for example, Netflix, for example, Roku, for example, Peloton. These are all companies that I believe are the top dog in their industry. I find that to be a dramatically advantageous position to be in, and I think companies strongly benefit from being in that role. Apple's a top dog in its field. When Apple releases an iPhone, it's the news. When Microsoft releases a smartphone, no one cares. Being top dog really matters. Roku has that position. Peloton has that position. A number of great companies have that position, and I believe that to be an important trait. Top dog in your industry. I think you also have to have a visionary leader, a person who really has the capacity to see into the future, to understand the way that the world is moving, and to position their company in a way that really fits in the future. Like, they are the people who are best at envisioning how to grow a company successfully 10 years into the future. So a visionary founder, number two. I think that it's important to be in an industry that generally is growing, an industry with tailwinds. An industry that does not have tailwinds would be the internal combustion engine industry. So I would not be choosing to invest in a company that primarily invests in internal combustion engines, for example. A industry that does have tailwinds, I would say, is mobile gaming. An industry that does have tailwinds, I would say, is connected TV. Just to name two examples of industries that are naturally going to increase in size, in market cap, and become a larger part of our lives year after year after year for 5 to 10 years from now. These are industries that have tailwinds at their back. Another thing I look for, and this is going to be kind of surprising, I guess, and controversial, another thing I look for are companies that have a high valuation, companies that are expensive. If you look at history, the best companies that have ever met the criteria of growing by 10 times, 15 times, 20 times, 50 times, 100 times, 100 baggers, they are continually expensive throughout their time. Every slice of time, people would look at them and say, this stock's too expensive. People have said that the whole way up on Amazon, the whole way up on Apple, the whole way up on Netflix. These companies always have high price to earnings ratios. They are expensive their entire existence while 10 times in value. So honestly, I look at that. Whereas companies that have a low valuation, yeah, it's low for a reason. So don't expect to find a company that's like, you're the only one who knows. Lots of people know about good companies, and they cause them to be expensive for a reason. So I look for companies that have high valuations. The best companies do. And that's kind of a hard thing to wrap your head around. But with my objective of finding the best growth stocks to 10 times your money, you have to accept that you're going to be a part of companies that are more expensive than some other aspects of the market. So that's another thing I look for. What else do I look for? A company that is continually releasing new products, continually innovating, not necessarily entirely reliant on one product or one client or one way of making money, and that you can see them continually creating new products. Fiverr is an example. Earlier this week, they released a new product of, so Fiverr is this gig website where you can hire people to do digital work for you, like make a website or make a logo or write a blog or manage your social media, any sort of digital task it can do. And Fiverr recently released a new feature called subscriptions. So you can hire, instead of just hiring a one-off website design, which I in fact have done, you can hire a person to be your social media manager forever, at a monthly fee. I think that's an innovative product that Fiverr is doing. And, it kind of sounds related, but I've used Fiverr many times and I know they were not doing that recently. So that would be that. Peloton releasing new bikes, new treads, new products all the time, new apps. I find those, I like to see companies continually releasing new products. So those are just a couple things off the top of my head that I look for. And that's how I'm going to be making picks going forward. The companies that I've listed, I already own, and I think are widely known as great companies on FinTwit, financial Twitter. Many people talk about them. C Limited, Shopify, Roku, Cloudflare, Peloton, Fiverr. Everyone's talking about these companies. No, they're not a secret, but you can be a part of the greatness of these companies. And I'm going to try and bring sort of different picks, ones that are new to me. None of these are new to me. I've had shares of these companies for, at least the last year and part of the last year. And I just find them very, very widely talked about. Square is another one that comes to mind. But I want to sort of find new companies. So that's my purpose and objective on this podcast and my purpose and objective throughout this project. And I would like to just try and find new companies because I find it a very interesting subject. So.
And I like the way that you collect your data by using Excel spreadsheets and being able to get up-to-date updates on price changes, percentage gains, percentage losses. What would you say is one of the most difficult aspects about following your type of investing?
I mean, I don't know. I don't really find any part of it difficult. It comes naturally to me. I find myself to be naturally interested in it. I don't find it to be difficult. I find myself wishing I could do it more, honestly. So I don't know.
I guess one thing that I'm thinking of is like these high growth companies. They're making pretty big gains, especially with some of the companies you named, pretty quickly, but they're going to be pulling back. And being able to hold on to stocks that pull back 10, 15, 20%.
That's a good point. I became an investor of this style mid-pandemic. I've not been doing this for 10 years. I was an index fund investor until the pandemic. And whatever ingredients were in the air caused me to turn into this kind of investor. Just recognizing the capacity for large, life-changing growth of capital. And so... it's you have to be able to tolerate higher volatility. And I will say the entire time I've been investing in these companies, they've just generally gone up. So I'm not going to act like I know what it's like to lose 50% of your money, because I've been pretty successful during the entire pandemic because the names I just said are all up a lot since the pandemic. So I don't know what it feels like to really hold a stock for a year while it's down 50%. Am I going to stick with that? I don't know. Or am I just going to be like, fuck this?
It's very Wolf of Wall Street, right? Judge me by my losers because I have so few.
I don't have any losers right now. My biggest loser is I bought Peloton basically at the top at like 160, and now it's at like 150. So I've lost a little bit on Peloton, but Peloton's a great company. They have more demand than they can handle. That's a fixable problem. Their bikes are better than everyone else. They're obviously the top dog in that industry. They have insane revenue growth. A lot of people say that Peloton people are going to go back to the gym after the pandemic. I don't think so. I think some will, but I think most people are going to stick with their Peloton. It's great. You can have classes. A lot of people like the privacy. I don't think that's going to happen. So I'm happy to hold Peloton. And that gets to the idea of conviction. You have to that's why I like learning about companies like this is so that I understand them and I believe in their business so that I will hold them for years, for 10 years, because I think that's how you make real money is you got to lengthen your time horizon. I think it's a mistake to think in terms of this week or this month because you're not going to change your life that way. And if your purpose is to like become wealthy enough to like really make an impact on your family's life or really make an impact on your life or really give in the way you want to, I mean, imagine how it would feel to be able to like give, your mother a trip whenever she wanted to, or, I'm not saying money is everything, but I think it's clearly obvious that it's a good thing you can have a better life if you're wealthy than if you're not wealthy. And, if that's your goal, I believe this is one of the best ways to do it. So
let's dive in with the pick.
With that rant over, sort of introducing what I'm into. Yeah, let's get on with that. Yeah.
So the company that you were researching is FUBOTV. I think they're tickers.
You're confusing your high school jean brand with FUBOTV.
Fubo.
You said FUBU. FUBU.
I'm pretty sure I said Fubu.
FUBO is what you're thinking of.
TV. It's currently trading at $46.66.
So this company, it's an American streaming TV company that was obviously trying to fill the last stand, the last holy grail of cable TV was live sports. That's anyone who thinks about the issue, in my opinion, of streaming versus cable TV can immediately come to the conclusion that the only reason anyone has a cable subscription is for live sports. That is the only thing people are holding on to. Everyone knows it. You don't have a great streaming live sports option right now. No one is holding on to their cable subscription to watch the Discovery Channel. They're doing it because they like watching live sports. And there's no current big Netflix-like option for that. There's Fubo TV, which is trying to become that way. If Fubo could get, Fubo is nowhere near as big as Netflix in terms of subscribers, but Netflix is not really its competitor. Netflix doesn't have live sports. Netflix has TV shows and movies. Fubo has live TV. So they're just two different experiences. So it would be common, I think, for people to have both. And that's why I was initially attracted to this company, is that it filled this gap that Netflix wasn't addressing, that is the last stand of cable TV. And I believe eventually that will turn into a streaming service. That's a sort of tailwind I had. Eventually people will fully cut the cord and enter Fubo TV. So that's what got me excited about it. I thought it has the potential for dramatic growth. It fills a niche that doesn't really even compete with Netflix, in my opinion. People would have both or would decide which one is more important to them and have one or the other. Let's go into a little bit more. So it was founded in 2015. It went public in 2020. It really is known for streaming international soccer. So if you're a fan of Barcelona, and a lot of Americans are, in fact, fans of international soccer, you had no way of watching all these games. And with Fubo, it has every game. I've done their free trial. I've tried it out. You can watch, any game anywhere in Europe. I watched Dutch leagues. I watched games between, I watched international games. Like you could watch as much soccer as you wanted to. And a lot of people like that. So that's another niche it kind of addresses. But you could also watch Fox News. You could watch CBS News. You could watch, like normal cable TV. So it's exactly like a cable subscription, but with a little bit more international soccer content. They have deals with the NFL, MLB, NBA, NHL, MLS, international soccer. It was a company that kind of has a number of firsts. It was the first streaming platform. It kind of became famous because it broadcast the 2018 World Cup in 4K, which was the first streaming service to do that. Maybe you remember at Coachella, there was that hologram Tupac thing.
Yes.
That was a Fubo TV contribution to the world. They acquired a company, an entertainment technology firm. So Fubo owned the company that did that. So that's kind of cool,
I mean, I think people really hated that hologram stuff.
Really?
Yes.
Why?
It was poorly received.
You think it was poorly received?
Yes.
I don't know. I don't really remember that. But people kind of do the hologram thing occasionally now, don't they?
For who?
Aren't they I don't know. Aren't they doing more dead people holograms? Or is
Dead
it just
people holograms? What are you talking about?
Well, that's what Tupac was at Coachella.
I think, didn't they do Frank Sinatra or someone? I think
I
they
don't
did
know.
someone else.
So what I'm trying to say is Fubo is kind of they have a history of innovation. It it has a full cable service. In my area, if Dallas, Texas, you can get 226 channels.
Do you know how much the service costs?
Yeah, so there's a couple different services. There's a single subscription is $65 a month. A family subscription is $80 a month. And then they have a third subscription, which is like the Latino subscription, which is like $30 a month. Okay. So I got a free trial of the $65 one, and it was exactly like full cable service with more sports. Like I could watch the Big Ten Network and I could watch the English Premier League on the same service.
Do you know how many subscribers they have?
So at the end of Q3 2020, they had 455,000 paying subscribers. I don't have the number in front of me, but Netflix has like 100 million, 200 million. Okay. How many? Okay, I should look that up. How many subscribers does Netflix have? So Netflix has 203 million subscribers in comparison to Fubo, which has 455,000. So, like I said, I don't think Fubo competes with Netflix. I think it's an addition to Netflix. And I see that and I'm like, wow, there's an opportunity to grow into that. And there's two opportunities. I mean, there's just generally Netflix people who could add live sports to their offering. And there's also people still watching basic cable for the live sports who could. So I like the opportunity there. So they have 455,000 subscribers in Q3 2020, which was a 58% year over year from 288,000 in Q3 of 2019. They also, in that time, increased their average revenue per user, or ARPU, as the chit chat guys like to say, they $67.70 per user. And the interesting thing about that is that they don't make any money from subscriptions. As you know, many of you would probably know, cable, getting exclusive rights to broadcast sports is like insanely expensive, I've heard.
Yes.
And so all of their they're just doing subscribers at cost to get people in the door. Because just because you're watching an NBA game on Fubo, you're still going to watch ads. NBA games have breaks for ads, so you still see ads on TV. But Fubo is kind of more in charge of those, and that was another thing. They're making their revenue by assembling and broadcasting ads. In addition to that, they recently signed a contract with the Trade Desk to be their ad manager, or something like that. So like they make money on ads. And then another growth revenue opportunity is that they recently acquired 2 sports gambling companies. And, the idea is that they're going to integrate gambling into the Fubo experience. And that would be another source of revenue, and people are like, okay, gambling is going to make you lots of money. So there's a lot of growth stories that sort of propelled it into being this like really hot stock the last couple of weeks. It increased to the mid 60s, and now it went back to under the 40s, and now it's kind of trading sideways. So, yeah, that's a little bit about it.
Why would someone pick this company over maybe like a Hulu Live or YouTube?
Yeah, well, that's honestly where I arrived. Everything I've said up until now is pretty exciting.
Yeah, it sounds really good. I mean it sounds like they're innovating. They're trying to merge with different companies.
They're growing. They have 455,000 people willing to pay at least 65 or at least 30 for the Latino section. I wonder how many people do that, but like 455,000 paying subscribers. Netflix has 203 million. So there's an obvious, demand or potential market there. And like I said, cable people watching sports on cable are going to continue to go over to that. The stumbling block I arrived at is that there's just immense competition in this space already. It seems like there's 3 horses already in the race. There's Fubo TV, there's YouTube Live, and there's Hulu. And all of them are broadcasting live sports. That is Hulu's entire ad campaign. It's those guys in the green jersey. It's a famous athlete in a green jersey saying, Hulu has live sports. That's their ad campaign. And why is that their ad campaign? Because this is a market that no one has taken over yet. And everyone knows that Hulu probably has movies, but also Netflix does, but no one has live sports. And so Hulu is hitting that really hard. YouTube Live has live sports. I watched the Super Bowl this year on YouTube Live. That's obviously something Fubo also had it, but there's competition for that. And YouTube Live, being owned by Google, they can just like run their service at costs. They don't have to make profit. Like they can just be like, all right, we want to take over this industry. So we're just going to beat you, Fubo. Fubo, because we have Google behind us, and you have no one behind you except for venture capitalists. And YouTube Live is like $59 a month. Like I said, Fubo is $65. I wonder if they intentionally priced that lower just to try and beat Fubo. But I just see I don't feel like maybe all three could be winners in that space, but I don't want to pick the loser in that space. The thing is, here's two things I could see. I could see all those companies growing. Hulu, owned by Disney as well, to speak of big pockets behind it. So you have Disney and Google in that space already. Maybe the fact that Fubo is a independent company, laser focused on their products, means they can beat distracted Google and distracted Disney. I could see that story happening. Look at Roku, it crushed Amazon. Look at Shopify, laser focused on one thing. Amazon doesn't even try anymore to compete with them. They just won the space because they're better. So maybe Fubo does that. I don't know, but I don't see any clear advantage that Fubo would have over YouTube Live or what was the other one? Hulu. And so I don't know. I don't see it I don't see it being the top dog in the space. I don't necessarily find a convincing argument. So that's what held me back. I like a lot of things about the company, but I just wasn't ready to. I feel like it would. There's more of an element of luck than I can tolerate on this one. So that's kind of how I arrived at the conclusion that I didn't want to make this my multi-bagger pick number one, which will be coming as soon as I find one. I mean, I'm going to wait and find one that I really believe in, and try and put out some good content on the website multibaggergrowth.com. Right now, I'm going to publish my portfolio. I'm going to publish the spreadsheets that Eddie was talking about. I'll probably change a little bit because I don't really want to put how much money I have out there, but I'll keep like the cost basis and the gains and stuff like that. But yeah, I'll put that up. I'm going to start trying to write articles. I don't know. I just find it a very interesting thing to do, and I feel like I have enough time in my life that I might as well just try and add something to it and be a little more productive with my time. So what do you think about Fubo?
I mean, the whole gambling part of it seems very interesting because you're going to be watching a live sport and you can kind of make bets while you're watching it, or maybe right before it comes on. Or also the international soccer seems really intriguing because a lot of the sports that we watch here in the States, like baseball, football, basketball, there's a lot of constraints in how you can broadcast that across different states. And at least with the soccer, it sounds like, at least what you're saying, people here can see Barcelona, Real Madrid, all these big soccer teams, and soccer's like $1 billion industry, and it's really popular overseas. And it'd be interesting to see if this company has a footprint overseas in Europe or Asia or even the Middle East. These countries that love soccer, it could really take off there. And it'd be interesting to see if gambling would be allowed in those countries as well.
Mm-hmm. Yeah, I'll say this. I was thinking about how I would use Fubo. And, this summer is the European Championships. Next summer is the World Cup. I would be exactly the kind of person who would sign up for my 1 month of Fubo, pay $65 to watch the World Cup, and then I would just cancel it. And I can see that being a problem, like the churn. I don't really know what the churn is, but I can see that being a thing that people would sign up for whatever event they care about, and then they would just cancel it because they don't care about sports the whole year round. A lot of people are seasonal sports fans,
But there are the people that, here in Texas, people love football, and they'll pay big money to see football. And you have a lot of friends that love soccer, and they would be willing to pay to watch soccer games to see some of their favorite players.
Yeah, I just wonder how sticky it is. I wonder what their turnover is. I don't know that.
Yeah, that'd be good to know, out of those, 500,000 people, what's their retention rate?
Yeah. I mean, because, that's just how I could imagine myself using it. Paying up to watch the World Cup and then canceling it. Because I care about the World Cup. I would be interested in that personally. But I don't care about, American football. So I'm not going to pay during Cowboys season, and that's just how I feel. So anyway.
I mean, because I know people who buy the NFL package just to watch their team.
Yeah.
And out of market.
It has NFL games. I believe it has all the NFL games.
I don't think it would have all the. I mean, if I'm sitting in Dallas, I can't watch the Bears play. I could only watch the Cowboys. Just because there's some kind of communication laws.
Well, see, I honestly think that's something I don't know that as a fact, but Anyway, that'd be good to know. If you, it's like literally every game, that would be amazing.
Yeah, that'd be the best.
That'd be the best. And like, this is what we've talked about. This was what Eddie said. What'd you say? You would like a company to be like, here's a buffet of 1,000 channels, pick 15, $20 a month. I would do that. I would do that in a heartbeat. I don't need 200 channels. Who uses 200 channels?
Some of them are just repeat channels.
That's bullshit. People watch the same 15 channels, and it's different for everyone.
That's why people cut the cord, right?
To get
That's how cable TV is. You get the same channels
TV
over
on
and over.
demand. And I guess I know I'm not having this idea by myself. Like, I'm sure other people know this, and there's some reason why it's not possible. Like, it's too expensive to do it that way for some reason, because that would be the best product. If Fubo did that, that would be something truly different. And
while researching this company, did you ever find out what the TAM, total addressable market, is?
I mean, that's always an estimation. Who knows what the total addressable market is? Like I said, Netflix has 205 million subscribers.
But at least for like live sports,
I don't
streaming.
know. It's a question. How many cable people are there still? And I did read while I was researching this, I read a statistic by Price Waterhouse Cooper that there's surveys done that 9 out of 10 people with traditional cable packages keep it for the live sports. So anyone still with cable is doing it for live sports. That's the reason. That's why they do it. And I don't know, fast forward 20 years. Do you think that's still going to be going on? I don't. I think that streaming eventually fully takes over. And so, it's like a question. Do you think Comcast and AT&T are still going to be relevant in 20 years for people's TV watching? I don't think so. I think they just go away and die. So something's going to take over live sports. That's a growth narrative for Fubo. I don't know. The competition is just so intense. If you're going to buy this company, just realize it could absolutely go to zero. They could absolutely they could go bankrupt. You could lose all your investment in this company. It could be a 10-bagger up too. It's just a very high risk, high reward play because, there's room for multiple companies in a lot of industries, but I don't know. I don't see why. I've tried YouTube Live or YouTube TV, and it's as good as Fubo. I didn't see any difference between the two products, honestly.
So, are you bearish, bullish, or neutral?
I mean, I hate that because I can see it going to zero, and I can see it going to 200.
This is why you started the website to pick. Is this PM
look,
or not?
Look,
it sounds like it's not.
I'm not.
Make a stand. Take a stand.
Okay, here's the truth. I'm not at a place in my life where I can honestly put money into an investment and feel okay with it going to zero. I don't really have money to lose. Like I said, I feel like I can tolerate a dip, but I don't want to lose everything. And I just feel like there's too much of a risk of losing everything. So I am not interested in this company. However, I am bullish on the stock. Two things can be true at once. I believe the stock is going to go up, but I just don't want to be a part of it because I'd rather put my money elsewhere. I like my other choices better than this one, and so I'd rather put my money there. But honestly, I'm going to say I'm bullish on Fubo. It's not for me, and I think that's another truth that your portfolio should be a reflection of who you are. You have to. I think it's good to believe in your companies. I think it's good to believe in your strategy, whatever that strategy is, whether that's dividend investing or options. You should believe in your strategy and, believe in the companies that match that. And I just don't believe in this company, even though I think it's going to go up. What do you think?
I do find it intriguing. Like I said, I think the most intriguing aspects are the international soccer and the gambling. So I would at least keep an eye on it for the next 3 or 4 months to see how that affects the price of the stock or the value of the company, because those are some pretty big aspects of it. Like you said, you got the European Championship League coming up and the World Cup coming up. So
yeah, then those are going to be big drivers for subscription. I know that. And I'll say another thing. Q4, they're doing another revenue release at the beginning of March.
Oh,
so so look at this. The trend of subscribers is 58% growth. So we'll see how that goes. It's like March 2nd is their next earnings. We'll see how their average revenue per user. Like I said, it's just a company I'm not sold on yet, but I'm going to absolutely keep watching it very, very closely. And if I see more evidence that's growing and becoming dominant in the space, I'll buy. I'm just not ready to buy yet. Honestly, I would rather buy it at 60 than it is right now. I would like to see it go up more. I would like to see more evidence. I'm not convinced yet. So I like the company. I like the idea. There's obvious potential in the space. I want to give it a little more time and just watch.
All right. So that's all we have on this stock. Keep listening to the podcast. Hopefully we get our first potential multi-bagger next week.
Yeah, send us your suggestions for any companies you'd like us to. All right, thanks. It was fun. Bye.
Bye.
Yeah, guys, so definitely an interesting choice going over FUBOTV as a potential next multi-bagger pick. I've definitely heard of FUBOTV before, but I have never really dove deeper into certainly the fundamentals, but definitely the technicals. And, I definitely want to give a technical perspective on what's going on here. As far as maybe taking a chunk from Netflix, it's possible. I mean, what's really stopping Netflix or Hulu or any of those guys from really exploring into the sports and entertainment area? I'm not sure. I really wish I knew more about that. But, if they get a piece of that pie, I mean, we can pretty much kiss cable TV goodbye. And, certainly Fubo could be the initiator of that. So I'm curious to see. I'm really curious to see. Anyway, let's take more of a technical dive here. And the first glaringly obvious thing I see, which, is I've got a couple of things here. The 21 weekly exponential moving average is crossing over the 200 weekly exponential moving average, and that's a good thing, right? It's a sign of, things are probably turning around for FuboTV, especially on a higher time frame like a weekly. That holds a lot of weight. But what I do have to say is it could very well correct back down, 41%. And still be considered bullish. So, I mean, there might be some short-term pain, but, we'll take a look at lower time frames maybe to confirm or deny that sentiment. But, again, I think this company's been around for a few years now. Let me just scroll on back here. Whoops, there we go. Let's see, 2015. So, yeah, about 5-6 years now. So there's definitely some data to back this up here. And, again, hard to get super, super bullish on this when, it's been consolidating for 5-6 years here, but again, things can turn around. If you believe in it long term, things can turn around. Look at Amazon. Again, not comparing it to Amazon because obviously they're nowhere near the same industry here, but I guess there's some overlap. But again, if you really believe in it long term, again, your guess is as good as mine if it's going to be the one of the leaders in their industry. But again, on a weekly standpoint, 21 is crossing over the 200. Certainly, if this trajectory continues, this thing will start to get more parabolic, and that's great. But you have to honor that 40% downside in the, at least in the coming weeks here. Volume, definitely a massive spike here, and again, I think that's more of a sentiment to the overall market. So we'll take a look at the SPY. We'll take a look at the triple Qs in just a moment here just to confirm that. But yeah, the volume is real. It's a very massive pickup here. And again, overall bullish markets makes sense that this is going up along with it. Let's turn on stochastics. Yeah, stochastics are still pointing north here. Again, as long as this stays above, 2630? Yeah, so 2630. Stochastics should generally be pointing north, and the moving average averages all of them. 21, 55, 100, 200 should start to turn northwards. Let's since there is some doubt here, let's pull the time frames out a little bit. I'm going to take the stochastics off here in a moment, but yeah, stochastics indicative of a cross down here after a good week to start, and then not as strong of a finish, but. Let's take off the Stokes just for now, just to concentrate a little bit more on the price action here. Now, we're only 2 weeks into February when making this analysis, so again, in a few weeks here, even this is going to be probably massively invalid. But what I can see here is the 21, which is the red, the 21 monthly moving average is gaining in on the 55 monthly moving average, and again, as long as it's above 2804. That 21 should get closer and closer to the, the 21 should get closer to the 55 here. So, again, short term here, this is looking pretty good. Again, overall market sentiment is bullish. Again, I have to say, the trend is your friend until the end of the trend. So, I think this warrants looking at some smaller time frames here. Let's take a look. Let's take a look at a daily here, and Yeah, I mean, it's bullish as we predicted. Again, we're going to take a quick look at, because I believe this is on the New York Stock Exchange. We'll take a look at the SPY. We'll take a look at triple Qs for the NASDAQ as well, and we'll see where general market sentiment is, which I can only imagine is bullish. But just taking a quick look here, especially on small time frames, at least ever since that 21 crossed over all of the moving averages on a daily time frame, this has been nothing but bullish, which is fantastic. I mean, definitely a healthy correction down to the 55 here on the daily candles. This is, and again, I'm not really a pattern trader here, but this is attempting to form an ascending wedge. So, and I'm going to say that, take this with a grain of salt here because I'm not really a pattern trader. This looks like an ascending wedge. I could be completely wrong here. But this looks 75% full, and when things get, when patterns like this get 75% full, they're definitely on the cusp of breaking. So, again, expect a break. I don't know if it'll be northwards. I don't know if it'll be down to the south side here, but I do think this will break sooner rather than later. And again, if market sentiment remains bullish, I would have to say this is going to be bullish. I mean, it's just a healthy correction. What happened here on here in the end of December into the beginning of January here. So again, probably short-term bullish, but again, I cannot emphasize this enough. If Fubo is this far above the 21 weekly, I mean, it could still correct 40%, 43%, and be considered bullish. So again, there is a chance you will be a short-term bag holder here, and there's a very real chance that if you invest in it now, you might be in a little bit of short-term pain, but again, the long-term benefit of this probably outweighs the short-term correction. So again, I'm probably going to stay away from this, but again, at the current price valuation of $46.66, this has a very good chance of being a multi-bagger. I'm just not completely convinced yet that this has turned around. We have to see how the coming weeks really react here. And again, when in doubt, go to the higher time frames here. Again, we're probably a few months out from really determining the direction here. So again, guys, I do think this has a lot of potential, but then again, not everything's going to be crystal clear. I think there is potential multi-bagger opportunity here, but I am likely going to be a little bit more patient on this one. Quick review of triple Qs. This is going to be really quick because it's quite obvious. Nasdaq, bullish as heck. I just wanted to recap a little bit on on a daily time frame how we were potentially going to correction territory, but I think this was during the whole GameStop fiasco and the whole Robinhood closing out the buys fiasco. And again, that's we should get more clarity this week here, but. Immediately that next week just closed right above the 21 and then onwards and upwards. It's great. It's the market that never ends, but man, you got to be careful for something potentially correcting here. Since this is a New York Stock Exchange stock, I'm pretty sure it is at least. It is warranted to look at the SPY, and again, it's above the 21 upward trajectory. It's looking pretty darn good. Again, weekly just closing higher and higher and higher. So again, things are looking great. I always get a little bit weary when we're this high above, at least on a ETF here like the SPY. 7 point what was it, 3%. So again, maybe a correction at some point here, but again, how could you possibly be bearish on this right now? So last thoughts on Fubo here. Just again, if the market is strong, I think Fubo will go along with it, but just be wary of some short-term pain. But good pick, guys. Good pick.